Good day, traders. Stacey Burke from Stacey Burke Trading. Daily currency levels for the pound crosses Tuesday, May 26th. No major news on the schedule today. Yesterday, Memorial Day weekend in the United States, so the U.S. session was fairly quiet. Looking at our pound Aussie, we saw yesterday we have stops above Friday's high and below the lows of last week. We're in that lower 100 pip expansion of our upper rectangle on the daily. We talked about that potentially still being a continuation for a measured move. That market has moved lower today. One full expansion, we are at one full expansion of that upper rectangle, but also the rectangle from the beginning of the month. We have a second expansion around 8,400. And a full second expansion of the upper rectangle takes us to that 77.90 region. Currently, we're just above the 85.50 level, and if the market takes out these stops, we would probably pass into that next 250 pip box, and again, moving towards that second expansion as well as possibly the lower box down at 8,300. And again, we talked about this gap on the left from October. There's not a whole lot to stop this market to falling and possibly even completely going right through the lows down at 80.75 if the market was to continue to move down there. Looking at our 4 hour, again, we're in that consolidation, but the market as we speak is moving lower. We have stops on the 4 hour below 85.40 and of course below the lows of last week at 85.25. As you can see, the green again representing swing lows and highs and potential stop losses. The market on the 15-minute chart is moving through those right now. We talked about the U.S. session longs from Thursday, and that was an area for stops. The market has gone 1, 2, 3, one push, two push, pulled back 1, 2, 3, and going down 1, 2, 3. This could be a 1, 2, 3 stop hunt reversal. Again, if we did get a reversal trade back up, the market could move towards the Asian short, hitting stops. That's a 50 pip move back up, and if it moves down into the 85.50 area, the market possibly could have a stop hunt back up and resume that trade back down short in the London or US session. So although we could get a trade back up, we could still get that swing back short around the high of the day in that US session. Next up is our pound Canadian. And looking at our daily chart, again, that market was fairly quiet yesterday, Memorial Day, consolidating, but we talked about it possibly moving back through the lows of last week through that 69.70 area. Again, this 7,000 area could act as a support, but again, we had a big strong move down in the initial part of the month. It's consolidated. We haven't seen anything giving us an indication of a reversal yet on this time frame. On the 4 hour, we talked about that move down and the consolidation and then dropping again another 250 pips and consolidating. Again, that market is above the 7,000 area. It doesn't appear that there may be a low in place, and we could get a measured move for a second full expansion down to that 68.20 region if we were to break the lows. Again, above 7,000 currently, the market has had 3 pushes into that peak formation gap, the swing low on Friday that gave us our double top. We've pushed into it 1 push, 2 push, 3 pushes. We may get a stop hunt back up to that level for a move back down. If the market was to keep creeping, it could fall through the low. Again, there's stops below the low of the day, below the swing lows of the U.S. sessions on Thursday and London's lows on Thursday. Again, we may see a 1, 2, 3 up, stop hunting the Asian shorts before that move back down. And again, if this market was to break through these highs, we could get either a stop on high and a pullback continuation, but currently this market has consolidated underneath of the peak formation. Next up is our pound Swiss. This market has again moved sideways in that consolidation under last month's swing low. We had a brief pullback and move down, but the market again has consolidated in double inside bar We have a descending micro trend line. The market is still respecting that. We're inside of a squeeze pattern, so we're either going to possibly pop up, retesting the highs of last week and finding some support inside of that swing low from last month, or this market may break down and retest the lows. When we look at our 4-hour, we can see that, again, this market is in that tight consolidation between the peak formation of last week and the swing low peak formation from towards the end of last week. We've consolidated tightly. We're still underneath of that swing low from April. And again, we have a bit of a 1, 2, 3, unless this market breaks through. Even if we do test the stops from last week's Friday's highs, we may still see a retest of the lows of the week. On our 15-minute chart, we had the 3 push pattern on Thursday, Friday, give us a peak formation. The market is trading up in that area. Again, we could still get a 1, 2, 3 stop hunt, or even a second push, a second push into this second peak for a retest of the lows. Currently, we've moved up almost 50 pips and consolidated. They're working the high of the day. How we go in the Europe Open in London, we may again just retest that highs for a break of the lows, 1, 2, 3. There are stops below the low of the day, below the lows of yesterday and Friday. And of course, you can see further down from Thursday, there is lots of stops sitting there. Again, if we were to break through the highs and continue to move through those highs, we would possibly see a stop hunt down and a continuation. But currently, we're up underneath of the peak formation. Next up is our pound yen. And again, another pair that had a very strong move and then consolidated, and we've stayed in a fairly range-bound market for the last 3-4 days. We have stops around the 32.50 area and below the lows of Friday at 30.67. On our 4-hour, again, you can see that consolidation fairly clear. The range has tightened up. Stops again above Friday's highs, 31.93, and below the lows of Friday, 30.67. So it is a fairly tight market. We are moving up towards the upper part of that box. On our 15-minute chart, we can see there was a stop hunt this morning, finally breaking back through last Monday's high. We had consolidated underneath. The market popped up in the U.S. session. In the rollover, they spiked down, clearing out the higher level longs before moving back aggressively up through Friday's Asian highs. We have consolidated up near the high of the day. Again, another example of possibly pulling back and getting a 1, 2, 3 up towards the high underneath of that peak formation from Friday. This market could stop hunt down and continue to trend. Again, if that was the case, we may get a 1, 2, 3 down towards the swing low. But currently, we're sitting up at the high of the day after moving 50 pips and taking out stops. There are stops below the low of the day, below yesterday, and below Friday's lows. So, again, how we trade through the Europe-London session, if they're working the high, we would want to see that completely break higher and hit the stops. If we were to stop hunt down and then hit the highs again, we could get a retest of these Asian lows. Pound New Zealand. Again, we talked about this market turning off of 2,000. We've seen 3 pins. Yesterday was an inside day. We've since taken that out in the Asian session. If we take out the swing lows, this market possibly could break through that second full expansion of the upper rectangle and go towards the lower part of that 250 pip box at 97.50. There are stops and gaps all the way down, and that 9,500 area could be where we possibly head towards if this market was to move strongly. And again, a second full expansion takes us down in that 9,300 region. Excuse me. We've consolidated fairly tightly over the last 3-4 days in that just underneath 2,000 and 9,900. And again, we see that market has rolled off of that second full expansion on the 4-hour chart from the beginning of last week, where we had that upper rectangle and then the breakout and the measured move. So we are headed towards the lows of last week. The 98.880 level has a lot of liquidity underneath. We have stops all the way down. And again, plenty of room on that daily chart. So we've had 3 pushes down, 1 push, 2 push, 3 pushes. We're currently have a bit of a 1, 2, 3 stop hunt to the lows of the day. As we head into the Europe Open, we could see a stop hunt back up towards the lower level shorts. And if this market was to consolidate, put in a 1, 2, 3 and a peak and retest the low, we could see a very strong move back up towards the highs of the day and Asia. But currently, again, as we saw on the daily, we could see a stop hunt back up for a move back down later, possibly in the US session. Next up is our pound USD. And again, sitting still in that tight consolidation underneath last month's low. Inside of last month's low after breaking out briefly and trading below 22.50. A very tight range-bound market. If this market was to pop back up above 22.50, we could see that head up towards the 2,500 level. But if this market does break back out of that low from last month, we could see a fairly strong move, at least down to the 2,000 level after we break the lows. And possibly find support, but a second full expansion takes us around the 1900 level. On the 15-minute chart, again, similar, we had that consolidation underneath of the peak formation middle structure from Thursday. Stop hunted high. We traded around underneath yesterday before breaking above in the U.S. session. Stop hunting back into that lower box before breaking out this morning. We've cleared out stops from yesterday's high. We'll just remark that. And stops obviously from Friday, and the Asian session is basically the only thing left in that Friday session. We've traded back inside of. Stops are at the high of the day. They've gone up there twice. Second hit, we may get another third burst with a 1, 2, 3 again, hitting those stops. If we get the pullback in the 1, 2, 3, we could see this market retest back down, not only to the middle structure, which we'll mark off here, but possibly even back to the lows of today and possibly even yesterday and Friday. So currently, again, we are trending. If this market was to continue, it'll break through these highs, take out the stops, pull back, stop hunting back into the trend for a move back up towards Thursday's highs. Now, we could get a sideways market and then a continuation, but again, if they pull back and work this a third time with a 1, 2, 3, we could see a move right back through the entire session of today. So again, just closing on a quote, bit of focus time as we head into the session, and sticking to your process. Mastery is the path of patient, dedicated effort without attachment to the immediate results. We talk about this all the time. It's one of the hardest things to do as a retail trader, is to focus on just executing your process, having the belief and doing the homework and diligently paying attention to detail, having a very simple model that you can go to the market with and execute flawlessly, and know that over a sample size, your results will be consistent and you can keep improving on them. If you're focused on the outcome of every individual trade, you'll ultimately probably not develop any consistency, and you'll probably end up repeating a lot of the same old mistakes. So stick to doing what's right. Follow your process, master execution, let the results take care of themselves. Have a great trading session, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at StaceyBurkeTrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.